All right, we'll do our calls of the day. We start today with Shake Shack, upgraded to overweight from equal weight, target to 159 from 125. That's Barclays. Josh, to you, comp compares relatively modest and valuation no longer outsized relative to high growth peers. We expect shares to continue to outperform this year.
Yeah, I almost feel like a parent watching this company grow up. I bought it the day it came public, have never sold it. I've added to it on weakness. It's been a spectacular winner. I'm not selling any of my stock, regardless of how much it's up, because I genuinely believe that where this company is right now is in a place where they can really focus on margins and they can really scale this business, and it can join some of the more gigantic players in this space as one of the premier names. It's tiny in comparison to a McDonald's or a Chipotle or a Starbucks, but it's every bit as good of a story as those stories were earlier in their lifespan. Rob Lynch is the new CEO, joined the company having grown Papa John's to thousands of units. This is just hundreds of stores, but it's global and it's growing. And it's the high-quality option anywhere you see it. If you know anything about food, that's where you're going versus any of their competitors. And I think it's going to continue to work.
All right, we watched that one. Snowflake, Steph, upgraded today, overweight, target 200, Wells Fargo. They say shares appear more favorably positioned heading into 2025.
More favorably positioned, or that it's down 31% since last February. It's really been a dog, but I do think that 2025, the setup is really really good. And that is because they've got a whole new product cycle. Remember, product revenue grew last quarter 29% year over year. That was the best in 2 years. And the bookings are actually accelerating. So pretty decent visibility. Still a show me story, but I think the new CEO has his footing, and I like the story for 2025.
Freeport cut today to market perform from outperform. That's at Bernstein. The target goes to 46 from 51. So still optimistic from here, but not quite as much.
No, and the stock was 52 in the middle of last year, and we were all, holding it and buying it at those levels. I still like this area. I like Freeport and Tech Resources, both of them as copper plays. The demand for copper for the next 3 to 5 years is going to be extremely high. We have not found or created a copper mine in 10 years. And if you look at where the demand's going, which is EVs, data centers, all the things, even new homes, it's just going to be extremely large. And that's just secular growth, non-ex-China. If China ever wakes up, you've got option value, but I'm not buying it for that reason. I'm buying it because I do think that this company can create really great cash flow and earnings. It's just going to be a play that's going to take some time.
Okay. Let's talk Lulu, Mr. Belsky.
Yeah, let's
upgraded to outperform from market perform. The target's at 460. It was 360. That's at Bernstein. They expect to see an inflection in America's growth, stronger, higher income consumer, easier comps. What do you think? I mean, this stock hadn't really done anything, and it's looked pretty darn good for the last few months.
I think it's true. And, we are overweight consumer discretionary. I talked about Amazon and Tesla in the prior hit. But at the end of the day, Lulu's our largest overweight on a relative basis in consumer discretionary. Here's why. Great management, great product. Other companies in their space have clearly tripped on themselves, i.e. Nike. A lot of people are trying to play Nike as a value play. I think you buy stocks because they're working fundamentally, and Lulu clearly is. And their CEO has a great vision, and their product in terms of what's happening in North America, I think, is exquisitely positioned.
This thing looked like dead money for a while.
Well, they got some things wrong for a while, especially with some of the merchandise, and I think with their chief product officer kind of moving on, they're kind of centering more on what they're really, really good at, and I think that's what you're going to be seeing over the next year or so.
All right, Sarat, tell me about Disney. Upgraded today to buy, target to 147 at Redburn. Years of cord-cutting pressures, Disney finally at a point where streaming profit growth will more than offset the linear TV declines. Is that what the whole story is built on from here?
It's not the whole story, but it is a very important part of the story. It's a very important part of Disney. It's an important part of Comcast. You need streaming to start making money. You can't have this loss leader that you're going to get this valuation for. It's going to hurt your equity. And I think Disney's was dead money for a long time. It is one of our large positions.
Yeah.
So it's not a small one.
Good luck.
And look, it's not. I think you've got catalysts ahead. You've got Iger there, who's going to hand it off to somebody else. James Gorman.
Well, they have to get that right this time.
They do. They have to get it right. And the stock is not expensive, it's not cheap, but I do think there's a lot of secular tailwinds behind it.
How about United Airlines, which has just had a remarkable 24.
Yeah.
I think it was up more than 100%.
Yeah. Yep.
Today, the target goes to 115 from 105 at Bernstein. The target to 137. They're even more optimistic over at Wolf. Sarat, you have United.
I do, and I will tell you, I am selling my United and moving into Delta. I think Delta...
You're selling your United.
I am going to be out of United very soon, and Delta is going to be my one and only airline position because the management at Delta, the routes they have, the service they have, the quality of the airplanes and the product is far superior than any of our U.S. airlines.
You just dropping that little nugget on us. So, by the way, I'm selling United out of it.
I just, that's the January.
So therefore, no position soon.
It will be it will not be a small position. It will be no position.
When are you going to do that?
Over the next few days.
Okay. You have Delta?
Yeah, we have both. So,
well, by the way, Delta's target today goes to 77 and 75 from Wolf and Bernstein, respectively.
He's spot on. Delta by far is the best airline. And what United's great because we own it in our small mid-cap portfolio, an amazing, amazing company. But those two, you absolutely have to own both those companies, I believe. So keep the position.
You guys trying to have dinner with Ed Bastian? I mean, it's the best.
Why wouldn't we? Why wouldn't we want to have dinner with him?
I know he probably is. I know it's the circle.
No, Delta by far is a great operator. The fleet is good. Their expense control. People forget that they have their own refiner. I mean, all these kind of things that, from a secular basis, is by far the leader in the airline space.
And the other thing about United, it has recovered really well. It's done everything you wanted to do. I just think the next leg's going to be tougher for them, especially as Asia has to grow, and that's where they have the expense issues.
All right.